And to begin with, for our audience who are regular, they know, and if somebody is joining for the first time, this session is purely educational. Whatever we would be discussing in individual capacity, you can surely take that with a pinch of salt. By no means any buy, sell, or hold recommendation. That should be left up to you or your financial advisor. The idea of the session is to give you a starting point wherein you can always start your due diligence if something new comes to your mind, or maybe when you listen to the guest. And definitely, we are not here to impose our thoughts. It is basically an interactive session wherein we try to give you a perspective. You can surely take that or leave it as it is, and that is purely up to you. But the idea is to facilitate good conversation, and that's what we do. So with that, Dhruv Rawani is a very enthusiastic investor, and he has got very good hold on the power and energy sector. And in the past also we had 2-3 sessions where we discussed these things at length. So definitely this is again going to be a very interesting session. So Dhruv will start with a monologue, and then once he stop, then we can take questions. So as and when you guys have questions, so definitely you can send in a speaker request. I'll approve, and we take that question to Dhruv. So Dhruv, as and when you are comfortable, we can start with this session. And if it would be great if you can give some context and then start, and they will be able to relate better.
Yeah. Hi, hello everyone. I think I'm audible, Prince.
Yeah, Dhruv.
Yeah, perfect. So, thank you for joining in on a Saturday afternoon to one and all. Just happy to share my knowledge. Just reiterating the disclaimer that we always have. This is just purely of me sharing my knowledge and what my thought process is and what I'm reading and listening and seeing around, and just sharing it with everyone. Please don't take this as an investment advice, and I'm not a SEBI registered investment advisor. Go and contact your advisor, and contact them, and then take decisions. I may hold, in case we discuss some stocks or anything or company names, I may hold positions out there. So please do your own due diligence in that and before investing. So with that, let's start the session. Before that, let's just recap what we have discussed in the past, over the past 2 sessions, in a couple of minutes, to just give this session sort of a theme of where we are going forward and heading there. It's just a continuation of what we have discussed in the past, where, in past also I've spoken about how the energy transition thing is not just about electricity, and it's not just about renewables. It's a very much holistic approach to how we consume energy as a consumer, and there are different shapes and forms in which energy is generated across the world, and it's more to do with making them a lot more less polluting, as well as making it a lot more economical, is where the whole world is headed. The whole geopolitical angle has added a lot to it, and the additional characteristic that people are looking at is how we can become energy independent compared to the other countries. So this whole angle is really driving capital allocations across the entire energy transition theme. Another thing we discussed last time is how power sector will go through a huge capex cycle, which it's widely discussed now in the industry. The data center piece came out of the blue for everyone. That has just added a lot to it. And the renewable theme is very much there out there. In all of this mist, I think people have forgotten the old economy and how actually energy is produced over the years, where the profit pools actually sit within all of the entire energy domain, and what is it that leads to energy production. I think that is the whole key pointer here. I mean, is it just electricity? How is electricity actually produced? What are the sources of producing that electricity? While we might be using our EVs and thinking that okay, we are reducing pollution, but if your electricity is finally generated from a thermal power plant, I don't know if we are really ending up reducing the pollution or not. So even today in India, at least, close to 75% of the entire electricity that is generated, in spite of whatever capacities we have added, stands at close to 75% is still thermal, and the rest is hydro, nuclear, wind, and solar combined. And just last month, I'd shared on my feed also how the government is looking at spending close to 6 lakh crores of worth of capital for setting up another 80 gigawatts of new thermal power plants, which was not the case, which was somewhere at around 30. Then from 30 gigawatts, they increased to 50 gigawatts, and from 50, they have not end up making it to 80. Last week, they talked about how, they have ordered all these thermal power companies to go out there and, buy equipment worth $33 billion, which translates to close to around 1 to 2 lakh crores of equipment, which pertain to the whole thermal power industry. And why I'm harping on this is, while the whole renewable energy landscape evolves and the IRRs and capital allocators decide upon what the right profit pool is and where the profit really sits in the entire value chain, and it scales up, thermal, the coal, and all your oil and gas sector, they have proven their economies of scale. The unit economics are very much out there, and they have been there, and it has been the same for the last 100 odd years. And there has been no further technological development that is out there which can, try and risk it. Whereas in the case of solar, whereas in the case of wind, there will be new innovations to make it more energy efficient. Where, for example, while solar was first discovered, it was at 12% of your effective capacity what was getting generated. It has gone as high as 33% of the installed capacity. So basically, if you put 1 gigawatt of solar panel, it used to generate just 10% of its potential, because that is how much energy it could generate. But it has gone up to 33 or 35, if I may say. And there are a lot of innovations to take that generation capacity higher and higher from the same particular solar panel. So there will be sort of technological risk in the entire renewable energy space, including your battery storage, your lithium batteries. There is a talk of sodium batteries coming into picture. There is a talk of green hydrogen out there. But these all will end up still making a dent out there in the in the entire energy share of oil and gas and coal. The only key point that one has to track is in world and across the world, and specifically in India, because we are one of the largest resource rich country when it comes to coal, is when does the coal production start declining in the country. I mean, that is the time when one can actually say that that the renewable energy is somewhere sort of going to make a big mark in terms of energy production, and the profit pools will start evolving and stabilizing out there, and the winners will start getting decided. I mean, it is free for all at the moment. There are no there are no too many I would say entry barriers for companies. With capital, companies can enter in different parts of the value chain. Even if you're a small company, the value chain being evolving, people are trying to enter. Out there, in the past, I had also mentioned how as to the entire energy mix does not contain electricity, and we have also talked that we should look at the entire oil and gas space, how things are evolving out there, the entire mining space, which is required for these products. Because as the country looks forward to your energy independence, which is not just India, which is looking at, but also globally, and for India, it is a lot. It's a lot more challenging and important, because a lot of our foreign outflows or USD dollar outflows are towards purchase of oil and gas, and the government has been very crystal clear and vocal about reducing their dependence on imports of oil and gas over the next decade, and they are trying their bit to do that. And that is where if you would have read how the government is very much focused on increasing the share of gas from 5% or to close to 15 odd percent over the next decade. And if that is, and they have sort of committed close to 5 lakh crores worth of capital, it is about something like $67 billion, so which translates to somewhere 4.5 to 5 lakh crores worth of investment specifically in just the gas domain. So that is a very big evolving space which one should look at, because that space, the unit economics of companies, of the entire value chain, is very much uh, set up, and it's there about what needs to be done. Globally, that space is very much, you don't see too much day in day out innovations out there in that entire field. And so is the case also with your oil exploration, where we have hardly so out of total 27 to 29 basins which are there in India, we are only present in 7, which means close to 21 basins, not a single well is drilled or explored. And even in the seven basins that we have, so the total quantity or the total percentage of where we are sits at roughly around somewhere around 10% of our total potential is what we have drilled out at the moment. So there is a lot of scope out there in the oil exploration bit, as well as in the gas bit. And when if the country is moving towards exploring gas, oil and gas are found at more or less at the same time. So it's not that it is just going to be towards the gas economy. Oil will also be a big beneficiary out of it. And in spite of whatever renewable energy, renewable setup is being done across the country by the private sectors and everyone, the public sector and the government is very focused on getting international domain experts and international companies out here in the oil and gas exploration space. And in the offshore space, we have just, you would have read about how ONGC discovered the gas field out there in KG Basin, and that is the first deep water gas field that we have explored. So, and there are a lot more. So, we are now getting to ultra deep and deep sort of mining of oil and gas and critical materials. And a couple of years back, the government had sort of, you'd have read about how 99% of the offshore EEZ field across the entire sea area on the east and the west coast has been opened up for exploration. Which till then, the defense the defense ministry and they had not allowed us to do that. So when you look at this big picture, you see a lot of huge TAM that will accrue out there, which is certainly going to happen, which is stable, which is proven in terms of their profit pools, where the profit sits in the entire value chain, who are the players, and this is not a sector where you can start given the complex nature and the technical nature of the work, the risks involved, and the kind of capital that is required. You won't see any new player coming out there just like that and saying, tomorrow I want to just go out there and explore oil and gas. It becomes very difficult for someone because it is a lot more challenging and it requires a lot more patience. So compared to a solar plant, which can get set up in a year or two, and the entire value chain is very quick. In terms of oil and gas, it takes years and years before you have some substantial profit pool that gets developed in each well. So that is what I would like to harp upon, that focus on the entire gas space, where there are pipes, where there are pumps, where there are gas fields, LNG suppliers, LNG contractors. That is there. On the oil side, the service players, the product players, the companies who are going to actually go out there and explore that oil for us. Those are the sort of companies that one should look at. And so that is the brief on the oil and gas part. Globally, so the only challenge that one needs to look at is when you have these international players coming to India. I think that is one of the key factors, because ONGC, Oil India, the two primary companies which are there in the exploration field in India, who have the balance sheet strength and who are doing that, can only do so much. And given the vast size of our unexplored area, which needs to be drilled and explored, you will require a lot more players internationally coming to India and developing the entire value chain for us. So that is the key monitorable. And what has really changed is the focus from government in terms of policy, where earlier it used to be on a nomination basis. Now they have opened up the entire area, and you can divide the area and you can only look at specific areas if you want. You need not take up the entire area, because that can be a lot more cost cumbersome. And denotifying whatever fields ONGC and oil has, and setting it up again for bidding, that has also helped, because ONGC and oil have limited resources. So what they have done over the years is possibly that, wherever they have found the highest barrels of oil in terms of quantity is, they have focused their employees and their entire capital and capacity utilization out there. And rightly so, because they have limited resources. So they have to drive their resources towards where they have get the maximum buck for their, capital and resources. So that is what they have done. But having said that, there are a lot of small basins, lot of small wells, which small companies can go out there and pick up 1, 2, 4, 5, 10 sort of a thing. And, it can still contribute to the oil and gas production in India. And the entire production, which has been on a decline over the past decade or so, with all these exploration activities which have happened over the past 4.5 years, and things will now start slowly bearing fruit over the next 3, 4 years. So one should be a lot more focused and see the commentary from all the exploration companies, see and study the companies in the entire value chain of them, and pick and choose what they like based upon where they find the comfort of valuations and growth and everything. But the entire value chain looks very exciting in terms of valuations, as well as not something that a lot of people would want to focus on. It's very, very much neglected even at the moment, and not too many players are focused out there. So that is on the oil and gas. And the next bit, in your energy independence also becomes mining, because coal remains one of the critical raw materials for energy. And if you add your critical materials, which are like lithium, cobalt, and even others, or your typical iron ore and aluminium which are there, we have hardly explored close to 10% of our mining area, and less than 2% is actually mined in India. So that is the sort of scale which is still left. And this has all happened because, probably technologies were not there. There were a lot of environmental concerns out there. But with the advent of underground mining that the government is focusing on, with the scale that the companies are reaching over the years, they have developed profit pools, they have gained experience, and a lot of more private entities are now looking at mining as an industry where they want to enter. And with the government opening up the entire mining sector for private mining, private exploration, commercial mining, which has happened over the last 8 years, things are looking up for the sector. And whatever, so like I said, from the time the mine is allotted, and it is bid by the company, and the company wins the bid, from there to actually production of that particular mineral or mine takes close to 4.5 years. So what has happened probably before COVID is now going to slowly bear fruit out here, and those companies will start throwing up profits, and the entire value chain starts getting developed. So that is one another space which looks very interesting, which needs to be looked at, because like I said, like less than 2% of our entire mining space is really developed in India. There's a lot more work out there. There will be a lot of machinery which will be used, and mining is one of the most labor intensive, I would say, industries in the country. And with the government looking at unemployment rates and providing employment and jobs for these young people, mining and the entire oil and gas provide a lot more skilled labor opportunities for both employees and employers, and can add a lot to our employment generation in the country. I mean, a particular mine there's a lot of value chain. I mean, you have mining equipment, you have companies which will carry those particular ores from the mine to the final consumer. The entire logistics is there. So there is a logistics part, there is a mining part, there is an equipment part, there is a labor part, and finally the whole mining company also remains. So when you add up these dots, where you look at it not from just purely from a goal of just making your energy source greener, but also looking at it from the perspective where your energy source has to be energy independent, where India becomes independent in terms of your energy domain. You have to look at all of these companies and the entire sector in detail, combine it with how your electricity is getting generated, and then you see the big picture out here, where things really add up. 1+1 becomes 4 probably in that sense. So this is how you'll have to connect the dots, see overlappings out there. You have the talks of coal bed methane, which is there, where you have the talks of coal gasification, which is there. You have the talk of the compressed biogas which is there. So the other part of the entire green space which the government is looking out at, including ethanol blending, the CBG blending, the coal-based methane, or coal gasification. These four are the four other emerging sectors which are out there in the entire value chain, which one needs to study. And there's a lot of focus, not just from the government, but also from the private companies, because private companies now have their ESG, ratings which are there, which are given by the global rating companies. And since they have to, comply with all of this, they are not only just looking at solar and wind, they are also looking at all of these four, because somewhere, you get a much better way. And somehow India has to consume the sort of rich reserves of coal that is there in the country. And you will see a lot of development in terms of technology to how to, generate energy out of this coal in a very, in a green and efficient way, so that, the pollution is reduced, and at the same time we can make the best use of the resources. And how do we make the best use of the resources is by, developing technologies. Coal bed methane is something where, it is converted into methane, and that is explored, and it is converted further into ammonia. And that is used in fertilizers and elsewhere. Coal gasification is a theme where you again convert it into different chemicals out there, try and reduce the pollution instead of burning it. And also the mining of coal will, like I said, connecting the dots, the mining of coal will be certainly required, because if you are going to set up 80 gigawatts worth of new thermal capacities moving further, then you will require coal for that. And where is that coal really going to come from? It is going to come from mining. And you can imagine the sort of development that in terms of mining which will be required, because that is the sort of quantity that one would require to mine. And so it throws up an entire value chain for the next 10 years, which we have not seen in the past, or probably which was a lot more in the PSU domain, where the whole sector being evolved. And the government is pushing both of these companies that, you focus yourself out there to just focus on the exploration activities. But once that is done, you try to outsource the entire drilling part, the entire O&M part of the entire oil and gas field. You need to outsource and see to it that you don't deploy your capital and resources out there, because given the scale of which, the exploration needs to be done in the country, they should try and focus their capital and their resources specifically towards, exploration activities, and leave the rest of the part, which is development, which is drilling, and which is, actual production of those oil and gases and the mining, to third parties. So once that whole space, so once they start outsourcing, you will see a lot more players coming into picture. And like I talked about, the 5 to 6 lakhs of crores is the sort of the economy and the amount of capital that will come into this, sort of sectors, and that whole value chain will get developed. So keep an eye out for all of these and the entire other things, like I talked about CBG. You have Amul being in a tie-up with Maruti, trying to use their feed or feedstock of dairy to convert it into CBG, and then that CBG gets blended into gas. That way, you reduce your gas imports, which will be there. And in gas, again, like I just mentioned, in the entire gas economy, you also have the logistics part of it. Like, how will you try and import that gas, and the entire logistics chain into from where the gas is stored, the ships in which the gas will come, the places where the gas will be stored into the pipelines, and the ports where it will come. So the entire value chain needs to be developed. Similar is the case for coal, how it will be shipped, how it will be transferred from the place where it is mined to the place where it is actually converted into energy in form of thermal, or in coal gasification, or coal-based methane sort of a thing. So all these things are there which one should study. And I think I'll just take a pause here, and we can start taking questions that people may have, and we can accordingly drive the conversation forward. Prince.
Yeah, Dhruv. So basically, one question is there. So recently, Oil Ministry announced to invest 7,500 crore for gathering data on oil in sedimentary basins. How we can rate this?
Sorry, how we can?
I mean, what's your view on this, and what would be?
Yes, so that's what, like I said. So, over the past 2 years only, the government has denotified the entire offshore area for exploration. And the first step for exploration becomes the 2D and 3D sedimentary and seismic data that needs to be collected and that needs to be processed, based upon which the companies will go out there and sort of figure out like where they want to first put their own capital, or where they want to go first, and accordingly plan their exploration activities. So that is the first step. The first step remains mapping of the resources. The second step is you just go and explore. Once you find in exploration, you will probably drill one well. So exploration stage is the most critical, because you will keep on drilling wells till you try to find oil. Once you try to get that data, you will again do a 3D study, where you will say, okay, now what is the, so first the 2D study is done only at the time when the exploration well is drilled. You will try to do a 3D study. Once a 3D study is done, then you will get a drill. You will ask for a development, well, which will be done to figure out how the actual oil and gas will be, drilled out from the basin out there. So you will do a development well drill. So they will figure out, okay, these all technologies, or this is the capacity which will be there. And once that development well is drilled, that is how they will determine, okay, now how much wells I need to drill over a period of time, based upon what sort of capacity is there. And then you need to have the evacuation facility, because understand, this is in deep water. So from there, you'll require ships, you'll require storage facilities out there, in the deep sea for exploration. So all these big things are there which will be done. And that is the size of the economy, because, it's not something that will happen overnight. So, and once that development well is drilled, once they figure out, they will send the FPSO out there. Once the FPSO is set up, then the whole oil and gas maintenance part kicks in, because then once the production is started, someone has to just go out there and see to it that things are working fine. And those are long-term contracts. So that is how the whole oil and gas exploration space works.
Right. So, Nivas, you can unmute and ask your question. Nivas, am I audible? So,
Yes, you are audible, Prince.
I think he sent by mistake then. So, Dhruv, there is another, although that is company specific, but he's asking okay, sweeping statements on mining environment, loss of livelihoods of forest communities, killed job creation in single breath, same flattening charm as kind of when burning from the so-called. I think the question is confusing. He can put it in a better manner. So one question is also on Pratham EPC. Any thoughts on that company? Obviously, no.
Yes, I have not studied that company in greater detail, but there will be a lot of EPC players which will come up in this space, because, like I said, this space is just opening up now. Because all these years there was a lot of private, private was not allowed to come and pitch in, because there were a lot of regulations. But over the last 5-6 years, there has been a lot of deregulation of, deregulation of the both the sectors, where the private parties are now interested. So slowly and steadily, we'll have these EPC companies. And like I said, both the exploration companies have been told to focus their part on just exploration, and the entire thing has to be subcontracted and outsourced out there. So you will see a lot of these EPC companies and product companies come into picture, especially service companies.
Right. And Dhruv, on the thing like within the value chain, wherein you think there is more of narratives, or you can say hype, rather than I mean across the renewables or whichever the sources.
I think the hype is more than hype. I would be very worried about the valuations that people are talking about. So, you look at data center and how things are shaping up out there. Understand the amount of electricity that data centers will generate or require, given how AI is shaping up. People are saying AI will require so and so amount of electricity and data centers and everything. Yes, things will pick up, but there are right of way challenges in our cities, because understand, data centers have to be closer to the sea, which means it has to be in cities, and in cities, right of way becomes a big challenge. So execution and implementation is something that one will have to monitor, and accordingly people will have to tame their growth prospects. Let them under promise and over deliver is the mantra that I would suggest, that rather than overpromise and underdeliver, because that can really have a huge impact on your valuations. And the other thing being, the kind of valuations that people are projecting is something that can be something to be watched out for in the entire renewable and the power space. I mean, nothing in specific, but the biggest risk for renewables remains the advent of new technologies every now and then. As new technologies, I mean, 3 years back, people were not too much gung ho on green hydrogen. Green hydrogen comes in, it fits in the value chain perfectly. So that will eat up a lot of capital, and capital is not just too much available. I mean, people will start, if a new technology sounds such a lot more clear and stable in nature, probably the capital will move there. So where the capital is actually moving globally also is something that needs to be taken care of. And you have to look at global examples like offshore wind has not been that much profitable globally. So if people think offshore wind can pick up in India in a big way, I mean it's really difficult, because out there in the sea you have to connect it, you have to evacuate the entire electricity out there to the land, so that adds up to the cost unnecessarily. So if you are not getting a higher PLF in terms of generation capacity out there into the sea, then why does it make sense to have that entire additional capex of going all the way into the sea and then getting it back to the land and then connecting to the grid? So that is there, and the grid capacity is the biggest challenge. I mean, right of way, setting of transmission capacity. You can set up the solar plant or the wind plant, but if you don't have evacuation possibilities, then it doesn't matter if the company generates or the particular site generates electricity. I mean, you need that space, you need that transmission line out there to connect it to both the state grid and the national grid, because currently people are focusing a lot more on the national grid because Power Grid has done that in a very good way, over the years. But people are not focusing on the state grid, which needs to be, strengthened a lot more. There things look much more clear, because there again a lot of capex will certainly go there, and there's not too much innovation again out there. So focus on where you have the technology risk also in the entire energy transition theme.
Right. Yeah, Ananya.
Yeah, hi. Thank you for the giving the opportunity. How do you see this hydrogen fuel coming, green hydrogen fuel?
So green hydrogen fuel is currently in a test pilot phase across a lot of companies, and including at the government level also. So I think in a year's time or year and a half time, people will understand the unit economics of all these green hydrogen space, and then they will look out where you need to actually deploy this green hydrogen. I mean, in which sectors, in which whether they want to use it for heavy vehicles, whether they want to use it for steel. So you would have read about how Tata Steel is trying out green hydrogen, how JSW is trying out green hydrogen in a
Yes.
small manner. DL is setting up its capacity. So people are doing a lot of testing out there. So wait for a year. Once this testing is done, they will figure out at what scale it stabilizes, and then they will try to deploy further capital going forward.
So my query is like, do you see hydrogen fuel beating solar and all?
So hydrogen, see, green hydrogen will be used. So how is green hydrogen made? Green hydrogen is made by, electrolyzing or cutting across your water cell in
Yes.
hydrogen, and that is usually done with the help of electricity. And how that electricity is generated is with the help of solar. So, solar and wind will still work, because they will really give the electricity for green hydrogen generation.
Okay. There are various pipe company working into this, as you said, like Tata. So I have studied like Maharashtra Seamless and other Ds there. So do you think this will be going forward doing better?
So pipe companies have a bright future, not just, it is not just, gas which is there. So gas, I spoke about how a lot of gas economy is going to develop over the years. But you also have the whole
Yes.
Jal scheme out there where, you have to connect each and every household for water and everything. So there's a huge capex which all of these companies are, undertaking, and the entire space of pipes is certainly going to benefit, because, it is used for housing materials. So your the affordable housing scheme of the government, you require pipes for that. So it becomes a building material also, as well as B2B, connectivity of pipes from lakes to cities, and also pipes for your oil and gas from the refinery to connecting your CNG and everything. So the space is huge for pipes, and a lot of sectors, sub-sectors are there, and companies focus on specific sectors. So yes, the pipe economy will certainly do a lot more better, going forward also.
So I read through some data and I found out like there is a anti-dumping duty uh, by government till October 26. So once this is removed, do you see like there will be some trouble into this
So
sector?
very
Or
specific, I mean, because which that pipe is for and how it is there, because there are multiple kind of pipes used for different use cases, and all companies are not just there in one pipe. They make different kind of pipes, so they cater to different
yes,
industry. So you'll have to go and
yes.
figure it out from case to case basis out there, and figure out what is there.
Okay, so like by any chance, have you read Maharashtra Seamless?
I've checked it out. It is there in the oil and gas space. It is
Yeah,
focused a
yeah,
lot more on oil and gas space. So you have to focus on how the oil and gas economy is developing, and accordingly figure it out in terms of that.
Right. So, Ananya, if there are more questions, you can come after Kailash and Sandeep. And I request once you ask question to unmute at same point in time, because two speakers unmuted at one point in time create echo. Thanks, Ananya. So Kailash is next
okay, thank
is
you.
Kailash. Mr. Kailash, you can unmute and ask your question. Mr. Sandeep.
Yeah, thank you, Prince. My question is more levered towards the prospects of oil exploration in India in future. Given the fact that now benchmark crude is around $82, if
Correct.
you look back at before Ukraine war, it was around 60. So if it goes back to 60 again, uh, will the exploration of oil in India would be still be profitable?
So oil and gas exploration in India remains profitable even at 60. Because understand the bigger theme that what is there is that, we require to contain the outflow of dollars and reduce the import of oil. So for India, it is imperative that, we keep on drilling a lot more oil and gas, to, make us more energy independent. What has happened globally is that there has not been any exploration activity that has been undertaken, at least COVID or pre-COVID also, because of this whole green climate change and green whatever ESG themes. There has been no exploration that has been undertaken, or not too much capital has been undertaken. And understand the existing sources of oil, or the existing basins of oil across the world, they are sort of peaking out globally. And if that happens, you can't just start producing oil overnight. So it takes a lot of efforts and years before oil comes on stream from different sources. So it's not going to be that easy for oil to stay at $60 for a pretty long time, because you have your oil producing companies which will come out and say we'll cut down production if oil falls to 60. So you'll again have the oil price stabilizing at around 70. So 70 to 90 is a band that everyone feels globally also, which is beneficial both to producers and consumers, because somewhere that is how the unit economics have been set up by everyone across the industry and the world. So I think 70 to 90 should remain the brief range, and if there are spikes below or above, you will see either the demand getting distracted above 90, 90, 95 or 100, or below 90, below 70, you will have supply getting constrained. And the only thing is the geopolitical risk and wars and everything that might affect. But we have already seen a lot of wars, be it the Russia Ukraine or the current Gaza war, which are affecting things left, right, and center. And still oil is stabilizing. So in that sense, but yeah, geopolitics remains the biggest challenge for oil in that sense.
Does government of India has any PLI schemes for oil exploration or
Definitely,
long-term guarantee?
yeah. So in this budget, that is with the right noises being made by the oil and gas ministry. Let's see in budget what they dole out for this particular sector. That is there, and also of course I forgot to touch upon how they are trying to get at least gas in the GST mix, because it suddenly reduces your cost by close to 10-20%, and you get an input tax credit. So gas costs come down, and the offtake of gas will be a lot more in that case. So, these are small nuances, and PLI schemes will also come where, it might not be in the form of a PLI, because PLI is for product companies. I mean, you can't just dole out a PLI for exploring, go out there and explore my mind. I don't know how they shape it up. It is more it will be in a different policy. PLI is more for products and services sort of a thing. So not probably a PLI, but yes, some budgetary support in terms of, either policies or some dole outs in terms of revenue share or something, they might just come out. And the biggest hindrance again, for the oil and gas exploration remains the windfall taxes. I mean, you have to allow companies to earn higher profits for the risk that they are taking. So that remains the biggest challenge.
Right. So, Mahesh, you can unmute and ask your question. Then is Ajay.
Hi, good morning, Prince. Thanks for giving this opportunity. And I regularly follow your space, and I want to say hi to Dhruv also. My question is, how do you look at the upstream companies functioning for next decade, keeping in mind the need of power for India? So, as the government is showing so much of interest on green energy, because to establish an upstream company for oil and gas, it needs a lot of capital expenditure. So, and I want to ask you why the margins are so fluctuating in upstream the upstream companies. For example, I don't want to take a company, but it looks promising. Hindustan Oil Exploration Company, the margins look so uneven. I wanted your opinion on that, Dhruv.
So, on the upstream part, like I've mentioned for the past half an hour or so, government is very focused. The companies after a long time are talking about growth. The public upstream companies which are there, they are talking about growth after a very long time, and that is why you see a re-rating in the entire space, which has happened over the past 1 year. And that is the reason. So, growth will be there because now they have been focused and they have been charged with a specific goal and vision that, you have to go out there and start producing and finding new oil. So in terms of growth, I am very positive that over the next decade, certainly, you will see quite a reasonable growth, if not some outstanding growth, but quite a good reasonable growth out there in both in all the upstream players. And the specific point you mentioned about fluctuating margins, I mean, they have to undertake. So there can be climate cyclone issues, and for smaller companies there are only limited projects that they are in. So even if one project gets halted for a certain period of time, it affects their entire revenue share and margins, and they keep on incurring cost on that project. And here you have to completely it is a revenue cost. You have to expense it out in the profit and loss, although it is for the long term. So in oil and gas upstream specifically, because the entire expenses cost is expense out. Once the production starts, you don't have any sort of cost out there, because everything is tap up. It is like a tap flowing of oil and gas. So the gross margins are very, very high when it comes to that. So you will see upscale and the economics of scale play out a lot more better out here once the exploration activity, and once it is settled that this oil well is producing oil or gas, whichever it might be. So that is why you see small fluctuations in smaller companies, but in big companies you will not see fluctuations, because they have a steady stream of oil and gas producing assets out there which take care of the cost, and they accordingly plan that over this period we want to only do this much because so and so is the revenue. So they try to protect the margins, and if the volume goes up, they try to do further capex.
The last question, why do you think a government straight away starts putting windfall tax at any point of time if they think this market will be growing and they want to push this sector into a next level? But you see lot to see now the windfall tax has come up to 7,000, I believe, last week. So what is the rationale behind government pushing windfall tax all of a sudden?
I think the rationale is very simple, that they don't want companies to make subnormal profits. But that is the nature that the government has to understand, that this is a high risk industry where you have to deploy a lot of capital without figuring out what sort of returns you will generate. So somewhere, because government is also answerable to its consumers, and if people feel that the companies are making subnormal profits, you will have political ramifications also. So that can be the only reason. Otherwise, I don't see any specific reason why they would do that. But somewhere, the stakeholders will have to try and go and explain that, what if if you don't give me policy continuity and policy stability, it is very difficult for me to put my resources, because windfall taxes came out of the blue over the last 1.5 year. It's not something that was prevalent before that. That is the only thing, and I don't know how long windfall taxes last. But if the government is really focused on the sector, which it shows, then that they have to rework on the entire way they try to earn profits or out of taxes or revenue sharing or anything from this entire sector, because they already take a royalty, they take a revenue share, they take a lot of things when an oil and gas block is bid out for exploration. So already there are a lot of taxes and fees that they charge, and on top of that, windfall taxes adds to a bummer for the companies.
Thank you, Dhruv. Thank you, Prince, for giving this opportunity. And
Thanks, Mahesh. Thanks very much. Ajay, you can unmute and ask your question.
Hi, sir.
Hi.
I want to ask that what will be the percentage of green power used in green hydrogen? Like if we break the cost.
So that is very difficult at the moment. I won't have that breakup, but green hydrogen, it can be considered green hydrogen when the entire power is green. I mean, it can't be considered. You can't use electricity generated from a thermal plant for using for breaking down the water molecule. I mean, it has to be solar.
Yes.
So it will be 100% of the cost, but entire how much unit economics, I wouldn't have that answer right now.
So actually, I was thinking that like solar and wind are a very good proxy for green hydrogen, right?
Yes, certainly.
Okay. Thank you.
Thanks, Ajay. Kailash, if you're able to speak now, you can unmute and ask your question. Meanwhile, one question.
Yeah, I was just wondering in terms of the hydrogen infrastructure in India, right? So I cover some companies in the US and like Plug Power and Bloom Energy. So I just noticed that it's kind of like a nascent market, and it's hydrogen as an energy source is kind of like just getting started out. So any thoughts on that?
So yes, so that's what I've been saying, that even in India and even so US has a lot of capital. So there's a lot of subsidy that is given for green hydrogen in the US. They are heavily subsidizing it, and that is why you see a lot more companies scale up out there quicker compared to India. India does not have the capacity and the balance sheet strength to support green hydrogen in such a big way. But India is trying its bit. So private sector will have a very big role when it comes to green hydrogen, and also the PSU companies will have a very big role of how they allocate capital towards green hydrogen. And all these companies are currently in a test pilot phase. All their projects, whichever you see and whichever you hear, are in a test pilot phase. And by FY25 or FY26, once these pilot phases get over, they will have clarity of how they want to deploy it in which generates the best IRR for the company. So you'll have to wait for a year and to figure out where they are actually deploying and what scale they are looking at company by company.
Thanks.
Thank you. So one question is there in the comments, and it appears to be a relevant one. So one is recent signing with India, Russia nuclear plant will drive energy shifting towards nuclear side apart from renewable steel.
So so nuclear is one thing that I didn't touch upon. Nuclear is a very proven way of clean energy, scalable energy, which has been there across the world for decades now, but which is not too much focused because what has happened at Fukushima and other places. But I think once policymakers worldwide realize that you will have to shift to nuclear if you want to focus on climate change, which is coming to the brink now. You will see that focus happening. But the only thing is, again, like a nuclear reactor takes close to 3 to 4 years before from the conceptualization phase to actually generating electricity. So not something immediate, but yes, it will be a part of energy mix going forward. But the lead will have to be taken by the Western countries, specifically US and Europe, once they start embracing nuclear technology in a very big way for energy generation. you will see the entire unit economics being made up, operating efficiencies being generated, and that is how, the cost comes down, and then, India also picking up in a big way. But yeah, the India-Russia, collaboration on nuclear is welcome, and, you will see a close cooperation between both the countries and the companies involved, but not so much of a big dent at the moment, because like I said, it will be done at a PSU level only. I don't see too much of a private participation out there.
Right. And there is another question from Shiva. Let me check that. So he's asking, do you have comparative assessment of pros and cons for Indian situation across solar, wind, crude oil, ethanol, gas, nuclear, and hydrogen?
Oh, I mean, there are those specific things. Like I said, all the renewable energy sources or any other thing probably you talk about, compressed biogas or coal-based methane or whatever you may want to call it, they will try to make a dent into the entire energy pie mix and create space for themselves. And that is what has been happening over the last 5 years. And they will continue to do. And I think more than pros and cons, the government across the world and the industries across the world are just trying whatever they can to currently figure out. Solar and wind have proven some sort of, confidence and acceptance, but again, they are not reliable even now. So that is why you have the whole battery energy storage system being tried to develop. So again, that pilot phase is happening this year. We'll have to see how that picks up, and whether that is scalable. Then, it opens up a big opportunity for both solar and wind in terms of energy pie mix. But yeah, till then, oil, coal, gas remains the bedrock of any energy security for any country across the world.
Great. Let me see if there are more questions. Jaggi, you can ask your question. One more question. So another question, same name, Dhruv is asking, view on Ceylon exploration technology business. How you?
Yes, so they are going through a reverse merger with their unlisted company, and they have very clearly mentioned that they would be requiring capital for further exploration. It's a very good company, has done well in terms of their exploration activities, but it is going through a special situation in terms of merger with its unlisted companies, and it will get relisted again. So a good company to watch out for. Again, disclosure: I'm not invested in the company. So one can look at it, but this is the critical aspect of how the merger goes through and how they raise capital for further drilling and exploration is one which needs to monitor out there.
Right. So there are two more questions. Okay, he's asking, do you think Likita Infra is the beneficiary of this?
I think, like I said earlier, also they all are EPC players, so EPC players will have a role to play. The balance sheet strength, the working. So for any EPC player, the working capital cycle is the most critical. If one of the project gets stuck, the entire working capital gets stuck, and the entire profit gets wiped away. For smaller EPC companies specifically, one have to look at that. I mean, how much of an allocation and what companies you want to bet on. That is the most critical part in any EPC company across any value chain, not just power.
Right. Yes, Sandeep.
Yeah, I have a question about oil exploration companies and the companies which provide technology. For example, I think most of the new prospects in India are in deep water. Are there any Indian companies who have expertise in that? Like, for example, Halliburton and Schlumberger, those are an oil services company which possess that kind of technology. For which Indian companies have that technology, or do
So
they still rely on foreign companies?
yes, so that's what the government is trying to do. They are trying to woo the foreign players in the entire deep water and ultra deep water space, because that is where our entire and those are where the basins which we have not explored and we have not done any sort of drilling or any activity out there. And there are no specific Indian companies. Whatever technology and everything resides or domain expertise resides is basically within the two PSUs, namely Oil India and ONGC in particular. So not too many, out there. So you will have foreign companies they will have to come to India and share their expertise and have a knowledge transfer and things like that. So, not happening, nothing, even in the unlisted space, nothing very major which is there, which one can look at.
Yeah, Kailash.
Yeah, sorry if this is out of purview, but any views on smart meter manufacturers in India like HPL and Genius
Yes, so
Power? Because the
we have
government,
discussed
yeah.
it earlier also. Smart meters is a value chain. I mean, they will do well. The entire smart meter ecosystem. I mean, you have to figure out their cost economics and how they are doing it. They will, I mean, smart meters are the way forward because we have to also not just focus on energy supply, but we have to focus on how we can efficiently manage our energy demand. And smart meter plays a very critical role in managing our energy demand where, time of the day, chargeability comes into picture that helps smart meters. I mean, but yeah, they are facing challenges. I mean, I just read the other day in Gujarat, people were complaining because their energy bills started going high. So there was a lot of reluctance to switch to smart meters. So, you will have these, developments which are there in the entire, because, we have been used to a particular way and suddenly, you change the way things work. There will be resistance. So, these things will happen. But yeah, smart meter is the way forward for the country.
Yeah, I think even in Kashmir there was this kind of issue where they were resisting. On another note, there's this company called Techno Electric, which is quite well diversified into smart meters, transmission, as well as data centers. Do you cover that
Yes,
company? Is it
I've
looking
looked
nice?
at that company and I have bought that company in the past also. So just a disclosure out there, and the company is good. It is one of the pioneers in the transmission capex cycle because they have the sort of expertise in doing challenging projects for power grid, and the promoter is very well renowned in the industry in terms of transmission and electricity capex. Wherever it comes to transmission capex and installation of towers or transmission lines and things like that.
Thank you so much.
So, Jaggi, you can unmute, and I think there would be more questions after that. I will take, otherwise, we'll close. Yeah, Jaggi.
Yeah, my question is like, how about like type 4 hydrogen storage cylinders? Like how do you think like how soon they will realize, the profits? Like right now, these companies are just manufacturing them. They are developing the technology like Time Technoplast, Everest Kento cylinders. So what do you think about these companies?
So there is an export potential and then there is a domestic angle. So you have to look at both of them. So for export potential, you have to look at when Europe embraces and how fast Europe is in embracing green hydrogen for the transportation sector. So that will give you a key idea about how fast the implementation will happen. In terms of domestic, like I mentioned just some time back, again, there are only test projects which are happening currently across the country. So a year or two down the line, you will have more clarity about how the offtake will happen for and where the offtake will happen in terms of green hydrogen value chains are concerned.
Okay, thanks, Dhruv, thanks, Prince.
So, couple of questions on oil exploration. Although you have covered that pretty well. So right now, oil exploration companies are being so talked. Conversation. Can you throw some light? So broadly, we have discussed, but again, anything you have to add through?
Nothing specifically. I mean, there are limited players which are there currently in the oil and gas exploration space. So one should just study them, see out their con calls, what they have spoken about, and you will find this broad picture out there. So nothing more to add in apart from what we have already spoken over the past hour or so.
All right. And Mad Max is asking, do we have any ballpark figure as to how much investment will go into gas distribution business across India?
So this is what the Prime Minister had announced: close to $67 billion worth of investments just specifically for gas. So that translates to close to 5 lakh crores. If I've got my calculations right at 80 rupees US dollar. So
Right.
67 billion is the reported figures. I'll just try to convert it myself, but yeah, that is the figure. So that sort of investment is already announced for gas. You will see it going up. Last year is the first year where India had a India Energy Week for the first time. So that shows that the government is very focused on it, and that will be a get together of where policy announcement will happen or going forward also. So one should look forward to that every year.
So, Dhruv, by any chance, you have gone through the company IRM Energy?
So IRM Energy is something similar to the best of my knowledge of what I did is something similar to what Mahanagar Gas and in the first gas does. They have CNG stations. So yes, as the gas economy develops, you'll have to figure out how the unit economics works there. I mean, what sort of offtake each and every gas pump will have, because they will only have gas pumps. How they sort of sweat their asset in terms of other facilities or stores and things like that. So yeah, it's just like a typical Mahanagar gas or Indraprasth gas supplying oil and supplying gas out there.
So, Dhruv, you want to comment on the transformer space? There is one question on the comment. So, basically, if I were to reframe the question at current point in time, keeping the valuations and the possible growth in future, how you position the transformer companies at this point in time?
I mean, transformer companies have a good, huge runway, because every time you talk about transmission capex, every time you talk about solar, wind, or anything, transformers will have an, implication, because you will require a transformer to convert the power. So wherever electricity is used, a transformer is used. It can be a small transformer. There is a transformer even in your house every now and then behind your regulator switches and everything. So transformers are used a lot wherever electricity is used. The runway is pretty high for them. I mean, valuations, one will have to, look at on their own.
So, Kailash, quickly you can go, and then Kamal's question, and then we wrap up for the day.
Yeah, thanks. So I don't know if you talked about this company called Deep Industries. They're into like a mix of upstream, midstream services and some gas compression and stuff
That's
like
what
that. So any
I
thoughts?
don't support specific companies, but product and services companies like drilling, there are drilling companies, there are specific service companies which are there. So you will have to look at all of these product and service companies which provide services and products to the entire exploration space. And the commentary from there, you will have to monitor, and you will have to see where their products are getting used in which part of the value chain, and you can accordingly invest in them. So Deep Industry is one of the companies which provide some products for the exploration piece. Certainly, yes.
And thank you. And just as a follow-up, any resources other than our normal conventional ones where we
Nothing
can, increase our knowledge?
I've come across apart from the conventional ones. Even I've been using the same place.
Thank you so
Thank
much, Dhruv. Very insightful.
Thanks. Kamal, quickly unmute and ask your question.
Yeah, it's insightful. I joined late. Actually, I forgot. If you have covered anything on the mining, I was just asking about the mining of the energy. If you have covered like NMDC, I heard that they are going into the lithium mining, and similarly GMDC. Are they doing anything on the energy space, mining something, or is there anything interesting in them? If you have read that.
So mining, yes. So I talked about critical mining, but critical mining is very difficult. It's not easy like an iron ore or a coal mining. Critical mining is very difficult, and that is why you see a lot of resistance from these players to go out there and do critical mining. NMDC is doing something in Australia in terms of gold and some lithium. GMDC has also spoken about it, but we have not seen at least any sort of a development on ground. Yes, paper. You've seen a lot, heard about they trying to bid for mines or anything, and so even if once the mines get allotted, I mean, even the recent one which happened last week or last week, the government did get a good response for the critical mining exploration activities in the country. So one will have to wait and watch of how, because it's a very difficult thing to go for critical mining. It's not easy compared to your conventional mining of coal and iron ore.
Okay. Thank you, Dhruv.
So thanks, Dhruv. It was really insightful, and there is always a scope of new session as and when there are new developments. So meanwhile, if anything which you had in your mind and we haven't asked, you can add to your concluding remarks.
Yeah, so I mean, like I said, just focus on the sector. We see how the commentary focus on a lot more, because this is a PSU heavy. Both the sectors are PSU heavy. Focus on PSUs, read through their commentary. because they are going to do the capex and figure out who they work with in the entire value chain, the product, the services. I mean, that is a space to bet on out here. So you can study accordingly the entire value chain and figure out from the oil and gas ministry what comments they are making, what the prime minister, the comments they are making, and accordingly that will where the final capital will be deployed.
Great. Thank you so much, Dhruv. And I sincerely request my audience to follow Dhruv's handle, wherein time and again he shares knowledge. And definitely he deserves a follow, and we can push him more for